Hello class and welcome to Introduction to Financial Accounting unit. In this unit, we are going to start with the first topic, which is Introduction to Accounting. Introduction to Accounting topic is going to give us a foundation of what we are going to encounter in our subsequent topics in this particular unit. On this particular part, we are going to start with the first objective, which is actually understanding what accounting is. Many scholars have defined accounting, but the broadest terminology that we normally use in defining accounting is that accounting is the language of the business. When we say that accounting is the language of the business, what we mean is that just like a language that is used for communication, accounting is used as a communication tool in the business setup. That is to say, if anybody wants to know about how the business is performing, they will just look at the financial statements or the accounting statements that are prepared by that particular business. And that is where this definition came from. To be specific, accounting has been defined as the process of identifying, measuring, and communicating economic information to the end users. The key important words there are identifying, measuring, and communicating. When we say that accounting involves identifying, we simply means that in recording information in the accounting records, we need to identify those important information that need to be given to the users. Not any information is relevant to the user. So it is the work of the accountant to identify the important accounting information to pass to the end users. The other aspect is on measuring, and when we say accounting involves measuring, here we mean in every transaction that happens in the business, we must attach the monetary value. We must measure the economic value of that particular transaction. In accounting, all the transactions that are going to take place there, they must be recorded in monetary terms, and that is what the measuring part entails. Communicating simply means now compiling accounting records or accounting statements which are going to be shared with the end user. So, in accounting, communication will happen when the financial statements or the accounting statements have been prepared and then issued to those users who intend to make certain decisions with regard to the organization. Also important is to note that in accounting, we only deal with economic information. We only deal with economic information. Any information which is not economic, which is actually not important and which is not attached some monetary value to the business, it is not worth being communicated. Somebody might ask, what are the objectives of accounting? The objectives of accounting are broadly categorized into 5. Number 1 is systematic recording of transactions. It is the work of the accountant to arrange or record the accounting transactions as they happen in the business in a more organized manner, such that anybody who needs to get certain information about the organization, then it is going to be very simple for that information to be retrieved. Accounting also involves ascertainment of results of above recorded transactions. The transactions which have been recorded, they need to be ascertained so that now the position of the organization can also be identified in terms of profitability or the financial position. The key financial statements that we normally use to ascertain the results of a financial or of an organization is actually the income statement and also the statement of financial position. Those two statements will actually be used to measure and ascertain the results of an enterprise or an organization. Another objective of accounting is ascertainment of the financial position of the business. The financial position of the business is actually ascertained by measuring the assets the business has, the liability the business has, and then if we take the difference between the two, the assets, and then we minus the liability, we are going to note the financial position of that particular business as at that particular date. Another objective of accounting is providing information to the users for rational decision making. Just as the definition itself had indicated, accounting involves identifying, measuring, and communicating important economic information to the end users so that they can be able to make decisions that they want to make with regard to the organization. And lastly, the objective of accounting is to know the solvency position. A business is said to be solvent if it has the ability to meet its financial obligations when they fall due. So, a business is going to be actually considered solvent when it has more assets than its liabilities. Another area that we need to understand in accounting is actually to know who are the users of accounting information. The users of accounting information have broadly been classified into two. We have those users we refer as the internal users, and we have those users we refer as the external users. The internal users are actually those people who are within the organization and they need the accounting information about that particular organization. Those users are the owners, who are also known as the shareholders, who are actually interested to know how the business is performing in terms of profitability and financial position, so that they can also be able to know whether to anticipate returns or dividends at the end of the financial year. We also have managers, who are also the internal users, who are actually charged with the responsibility of running the business. They need to know whether the policies that they have put in place are actually aiding the business to perform better, and whether those policies need to be adjusted or to be maintained. We have the employees, who are also the internal users, and the employees are actually the workers in that particular organization. They are interested in knowing about the business or the organization they are working in for job security purpose, and also to know whether to negotiate for salary increment and such like cases. On the other side, we have the external users. The external users, as I have said, they are those people who are actually outside the organization. These users include the potential investors. Potential investors are people with surplus income and who intend to invest that surplus income into a particular organization. So they will need the accounting information for them to be able to know the financial position and the profitability of the business, to aid them make the decision on whether to invest their money in that business or not. We also have another category we call the lenders. Lenders are actually the financial institutions like the banks, who need the accounting information to aid them make a decision on whether to give financial assistance to the organization or not, also depending on the financial position and the profitability. We also have the government, and the government will be interested in the business for the tax purpose. Any business is supposed to pay tax to the government, and it is through the accounting information that the government will be able to know the amount of tax to expect from a particular business organization. The government will also be interested in knowing whether the business is actually following the laid down laws and regulations governing the business enterprises. This is to avoid the business organization from exploiting the consumers. Another category of the users we have are the suppliers. The suppliers are those people who supply goods or merchandise to the business organization. They will be interested to know how the business is performing so that they can be also in a position to know whether to extend credit or not. We have the customers who are also the other category of external users who are actually the reason as to why the business is in existence. The customers will be interested to know whether the business has that ability to continue operating into many coming years. Then we have the general public, which is actually the other users who are not captured in the list that we have just explained. It can be people like the scholars who might be doing the research in that particular business organization. We also have the community around the business. Actually, because it is the community that is hosting that particular business, they will be expecting some returns from the business in the form of corporate social responsibility. Up to that point, I want to say it is worth noting that accounting is going now to be very smooth, having understood those terminology, and as we move forward, it is going to be very easy for us to conceptualize those particular facts. Thank you.